The stock market is a financial marketplace where companies can sell shares of their ownership to the public. When you buy stocks, you become a shareholder and own a small piece of the company. The stock market is also known as the equity market or the securities market. It is made up of stock exchanges, such as the New York Stock Exchange, NYSE, and the Nasdaq, where stocks are traded. The stock market is a key indicator of a country's economic health. When the stock market is doing well, it typically means that companies are performing well and the economy is strong. When the stock market is performing poorly, it may be an indication of economic downturn or uncertainty. There are two main types of stocks: common stock and preferred stock. Common stock represents ownership in a company and entitles the shareholder to vote at shareholder meetings and receive dividends. Preferred stock does not typically have voting rights, but it does usually have a higher priority in terms of dividends and assets in the event that the company goes bankrupt. The stock market is influenced by a variety of factors, including the overall state of the economy, the performance of individual companies, and the actions of governments and central banks. Investors can buy and sell stocks through a brokerage account. When you buy a stock, you are essentially betting that the company will perform well and the value of the stock will increase. If the value of the stock goes up, you can sell it for a profit. If the value of the stock goes down, you may lose money. There are different ways to invest in the stock market. Some people prefer to buy individual stocks, while others prefer to invest in mutual funds or exchange-traded funds, ETFs, which allow you to diversify your portfolio by investing in a basket of stocks. It's important to do your research before investing in the stock market. This includes understanding the financial health of the companies you are considering investing in and considering the risks and potential rewards of your investment. One way to invest in the stock market is through a retirement account, such as a 401k or individual retirement account, IRA. These accounts allow you to save for retirement by investing in a variety of stocks, bonds, and other securities. The stock market can be volatile, and it's not uncommon for stock prices to fluctuate significantly. It's important to remember that investing in the stock market carries risk and you should never invest more money than you can afford to lose. It's also a good idea to diversify your portfolio and consider working with a financial advisor to make informed investment decisions.